get started. In this section, the goal is for you to learn how to safely introduce cryptocurrency-related assets into an investment portfolio. This self-directed approach to portfolio management uses an iterative process for developing an investment project purpose and procedures document. You will learn that just as stocks are bought and sold for investment reasons, cryptocurrencies are also bought and sold for the same reasons. In this lecture, you will learn how to describe the purpose and procedures for an investment project. You will learn about tax considerations for investing in stocks and cryptos, and that one's choice of cryptocurrencies is limited by the brokerage or exchange used. Thank you for selecting this course, and welcome to Place Trades to Safely Invest in Stocks and Cryptocurrencies, an excellent way to add blockchain stocks and fiat to cryptocurrency assets into your investment portfolio as a blockchain stocks and cryptocurrencies investment budget line or portfolio segment. You have turned working hours into money, wages, salary. You have put yourself to work. You may have put others to work. Can you put some of your income and savings to work? One way to do so is by investing in assets that appreciate in value. In this course, our investment objective will be capital appreciation, making 10 to 50%, if not more. That is the opportunity we want, and we will discuss this in this course. Investing in high market cap cryptocurrencies can make this possible. It is not just wishful thinking. You will see analyst target prices that are 50% and more. What are some of the things we are afraid of that we want to learn about self-directed investments in stocks and even crypto? The fear of missing out is the first thing to fear. I am afraid I could have been making more money with my money. I fear not getting paid what I'm worth. I fear not having enough money to live the lifestyle I want to live. I fear not giving enough money to worthy causes. I fear medical bills. I fear my country's currency decreasing in purchasing power. Hold down work. Hold down paying bills. Hold down having a social life. Hold down exercising. Hold down being frugal. Hold down investing successfully. Whatever you have to do to learn how to do that on your own, do it. Do what you can to avoid wanting more money. I earned my bachelor's degree in finance and investments from Baruch College of the City University of New York and completed the H&R Block federal tax class. I completed the Toastmasters program and was the editor of the evening session newspaper in college. In 2019, I earned the Certified Associate in Project Management, CAPM, certification from the Project Management Institute, PMI. In New York City, I worked in consumer banking, private banking and brokerage, investment banking, also known as corporate finance, and at a major credit card company. In Plano, Texas, I was an International Project Management Office, PMO, financial analyst who trained 20 project managers on budgeting and billing projects. How that was aggregated into forecasts and financial reports for management, and how project accounting flowed into the company's accounting system. I attended meetings of the Dallas Association for Technical Analysis, a super conference of the Institute for Trading and Portfolio Management, ITPM, and New York City and Dallas Investors Business Daily (IBD) meetups. I have been a self-directed investor for more than 15 years. I am not a registered investment advisor. The information contained in this video is not a substitute for financial advice from a registered financial advisor who should become aware of the facts and circumstances of your individual situation. The Securities and Exchange Commission, the SEC, has the power to regulate and monitor any advisor, whether or not that person is officially considered an advisor. This course is not intended to subject me to the laws or jurisdiction of any country or territory other than that of the United States. All investment and financial opinions expressed are from my personal trading and investing education, research, and experience. My opinions are intended as educational material, learning opportunities, although best efforts are made to ensure that all information is accurate and up to date. Occasionally, unintended errors and misprints may occur. Do not rely solely on the opinions and information provided in this course. Do your own research. Past performance is not a guarantee of future results. Investing involves risk. The value of investments on paper or realized will fluctuate over time, and a person may gain or lose money on paper and in reality. I accept no liability whatsoever for any loss or damage you may incur. Investopedia defines investment thesis as a reasoned argument for a particular investment strategy backed up by research and analysis. We are going to use a different term, unique to this course. That term is Investment Project Purpose and Procedures Document, IPPPD, the IPPPD. Our investment project purpose is to safely invest in cryptocurrency-related assets, blockchain stocks, and cryptocurrencies. I partnered blockchain stocks with cryptocurrencies to facilitate learning about this segment of financial technology, or fintech. PwC, PricewaterhouseCoopers, in an article Making Sense of Bitcoin, Cryptocurrency, and Blockchain, wrote, "Blockchain is the technology that enables the existence of cryptocurrency, among other things. A blockchain is a decentralized ledger of all transactions across a peer-to-peer network. Using this technology, participants can confirm transactions without a need for a central clearing authority. Potential applications can include fund transfers, settling trades, voting, and many other issues. A cryptocurrency is a medium of exchange, such as the US dollar, but it is digital and uses encryption techniques to control the creation of monetary units and to verify the transfer of funds. The website GetSmarter.com emphasizes blockchain and cryptocurrencies are not of similar caliber, because when compared, blockchain transcends cryptocurrencies because it is not restricted to the financial sector. Blockchain is Bitcoin in the financial sector. Blockchain is Cardano with educational and economic identities from data in Africa. Blockchain is Ethereum with smart contracts in the legal sector. As we will see later in the course, Ethereum is not the only smart contracts crypto project or smart contracts platform. Smart contracts act as self-executing programs that facilitate the terms of agreement between the seller and buyer directly through code. This agreement and code exist within a distributed, decentralized blockchain network, making the transactions trackable, transparent, and irreversible. This type of automation can drastically boost productivity while slashing costs in business. Put simply, it helps you exchange property, shares, money, or anything of value in a manner that's free of conflict and is transparent, while also avoiding the expense of a middleman. Picking up at the second bullet point, this investment project simulation course starts with a $100,000 investment portfolio, of which only a 13% section of the $100,000, $13,000, will be used to introduce cryptocurrency related assets. Our simulation will not involve leverage, borrowing money, shorting assets, short selling, placing trades to profit on price decreases for an asset, or options. We are charged with selecting one or more blockchain stocks that can be anticipated to appreciate 12% or more, and selecting one or more cryptocurrencies that can be anticipated to appreciate 50% or more, with the time constraint being a holding period of 12 months and a day or a year and a day for asset prices to appreciate to goals. Here we are investors, not traders. Our holding period generally is a minimum of 7 months. Traders do not hold positions for more than 6 months. However, at an Institute of Trading and Portfolio Management event, the Institute insisted on not making holding periods a distinguishing factor between trading and investing. There is so much that is common between trading and investing. Here is an example of an exception where our holding period is less than 7 months. In April 2021, Ethereum was priced at $1,800. By mid-May, it was priced at $3,600 for a 100% or 1x gain. Selling Ethereum in less than a month at an unannualized 100% appreciation is profitable, and it affords one to reach a 1 year and a day financial goal quicker than planned. Gap up increases for stocks and parabolic increases for cryptocurrencies should be handled with care. With cryptos, be satisfied with a 65% to 75% gain, but if a winner is allowed to ride, cap greed at 100% or 1x price appreciation. In the 24-hour, 7 days a week market that is the crypto market, gains can disappear quickly. As an investor with asset holding periods, generally 7 months and greater, we must be able to change from investor to trader in order to place a sell trade in less than 7 months to a year and a day to capture a profit opportunity that has reached a financial goal ahead of the allotted time. An exception example where our holding period is greater than a year and a day could be a cryptocurrency increasing in price due to a technology update, and we would like the winner to ride a wave of good news for a maximum of 3 additional months. A long-term capital gain is preferred to a short-term capital gain. Be prepared to cut stock losses at 50%. Crypto losses are cut at 95%. What is the implication? Price dips are deeper with cryptos than with stocks. Industry intelligence says with cryptos, do not invest more than you can lose. We will discuss cutting losses later in the course. Positions that have gained in value are closed at the target price or at the deadline, unless the holding period is extended for no more than 3 months. An important component of our investment project is risk tolerance. The Corporate Finance Institute, CFI, summarizes risk tolerance with 3 points. 1. Risk tolerance refers to the amount of loss an investor is prepared to handle while making an investment decision. 2. Investors are usually classified into 3 main categories based on how much risk they can tolerate. The categories are aggressive, moderate, and conservative. 3. Knowing the risk tolerance level helps investors plan their entire portfolio and will drive how they invest. In the paper trading in this course, the risk tolerance will be set at moderate risk. Another component of our investment project purpose and procedures document is taxes. The capital gains and capital losses resulting from sell trades have tax consequences. The length of time assets are held can be short-term or long-term. Short-term is holding the asset 1 year or less. Long-term is holding the asset 1 year and 1 day or more. Although profit targets can be set for short-term and or long-term capital gains, against our wishes, capital losses can occur. Investopedia provides information about taxes and capital losses. Any loss can be netted against any capital gain realized in the same tax year. But only $3,000 of capital loss can be deducted against earned or other types of income in the year. Remaining capital losses can then be deducted in future years, up to $3,000 a year. Or a capital gain can be used to offset the remaining carry-forward amount. How were short-term and long-term gains taxed according to the United States Internal Revenue Service's rules for tax year 2020? Short-term capital gains were taxed as income. Depending on income, the tax rates were 10 or 12, 22 or 24, 32, 35 or 37, 10 to 37%. For example, the tax rate of 22% was for a single individual with an income of $40,526 to $86,375. Long-term capital gains tax rates were 0%, 15%, and 20%. For example, long-term capital gains less than $40,000 would have been taxed at 0%. The 2021 zero tax rate will be on long-term gains less than, increasing by $400, less than $40,400. So, a long-term capital gain is preferred to a short-term gain because generally the short-term capital gain can be taxed at a higher rate than the long-term capital gain. A tax lot is a record of all transactions and their tax implications involving a particular security in a portfolio. When a lot is purchased on different days and then sold, under the actual cost basis A variety of disposal methods can be used by a brokerage firm or for self-reporting to record the selling of assets. Two methods are first in, first out, FIFO, and last in, first out, LIFO. The selection of cost basis affects how one's capital gains are calculated. FIFO versus LIFO. At month 1, a purchase of one share at a price of $100 is first in my account. And at month 2, a purchase of one share at a price of $125 is last in my account. One of the two shares is sold at a price of $785 at month 20, a long-term capital gain. What is the FIFO long-term capital gain? What is the LIFO long-term capital gain? The FIFO long-term capital gain is $785 sell price minus the share first in my account at $100 equals $685. The LIFO long-term capital gain is $785, the sell price, minus the share last in my account at $125 equals $660. How can the prospect of taxes affect an investment plan? First, profit target percentages can include tax factors. Short-term target profit percentages should be high enough such that gains, net income taxes, minus income taxes, are satisfactory to you. Second, be prepared to hold all assets long-term to save on taxes, unless the short-term capital gains are satisfactory. Example, a 50% or greater asset appreciation held for half of a year is satisfactory because 50% or greater for that time period is 100% or greater when annualized. Visit irs.gov and speak with your tax preparer or accountant for all tax information. Brokerage firms and exchanges for stocks and cryptos. There are firms where people can buy stocks. There are firms where crypto assets can be bought. There are firms where investors can buy both. At Fidelity Investments and TD Ameritrade, customers can buy stocks. At eToro US and BlockFi, customers can buy cryptocurrencies. At Tastyworks, customers can buy stocks and cryptocurrencies. Interest rates on cash balances at Fidelity and TD Ameritrade are set at 0.01 annual percentage yield. The interest rate at Tastyworks is set at 0.001 annual percentage yield. Interest rates on balances at BlockFi are not fractions of a percent. Rates vary by the crypto or stable coin held. eToro does not pay interest, but it seems to have an interesting concept with social trading, seeing what was in the portfolio of other traders. eToro also has 3 of its own cryptocurrency portfolios that customers can buy. In descending order of popularity with their customers, the portfolios were, when I checked, the crypto portfolio, cryptos by market cap with 20,122 investors, the crypto portfolio for a balanced exposure to the cryptocurrency market with 9,291 investors, and the TIE long-only portfolio, where TIE is the leading provider of actionable analytics for the crypto industry, based on analyzing more than 700 million daily tweets to develop a crypto sentiment measure. In August 2021, this portfolio had less than 500 investors, only 250 investors. In the assignment section of the course content for Lecture 1, please complete the assignment, including answering the 4 questions given. You can glance at the assignment on the screen, pause the video, but all of this information is in the assignment section for Lecture 1. This concludes Section 1, Get Started, Lecture 1, Introduction, and the Investment Project Purpose and Procedures document. Section 2, Select Assets, with Lecture 2, Select Blockchain Stocks, is next.